Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape experienced significant turbulence as a major Bitcoin whale executed one of the largest single transactions in recent memory, selling 24,000 BTC worth approximately $2.7 billion over the weekend. This massive liquidation sent shockwaves through the market, causing Bitcoin's price to plummet below $110,000 and triggering a cascade of liquidations across the broader cryptocurrency ecosystem. The whale's wallet, which had remained dormant for over 5 years, suddenly came to life as the tokens were transferred to the HyperUnite trading platform for complete liquidation. Despite this substantial sell-off, the whale continues to maintain a formidable position, holding approximately 152,874 Bitcoin valued at more than $17 billion, demonstrating that even after such a significant transaction, major holders remain deeply invested in Bitcoin's long-term prospects. The market impact of this whale activity was immediate and far-reaching, with the total cryptocurrency market capitalization contracting by $205 billion within a 24-hour period. However, market analysts suggest this type of large-scale distribution may actually be healthy for Bitcoin's long-term monetization, as it represents the natural evolution of early adopters who purchase their holdings at dramatically lower prices, taking profits at psychological resistance levels. The selling pressure created an opportunity for institutional accumulation, as evidenced by Binance recording $1.65 billion in stablecoin inflows during the same period, indicating that sophisticated traders were positioning themselves to capitalize on the price dislocation. In a development that could reshape the intersection of politics and cryptocurrency, Trump Media and Technology Group announced a groundbreaking $6.42 billion partnership with Crypto.com to establish what they're calling the world's largest publicly traded CRO treasury company. This unprecedented deal involves the acquisition of $1 billion in CRO tokens, $200 million in cash, $220 million in warrants, and access to a $5 billion credit line, effectively making Trump Media the dominant holder of nearly 19% of CRO's total circulating supply. The market's response was immediate and dramatic, with CRO prices surging nearly 28% in 24 hours, pushing the token above $0.2 for the first time since December 2024. This strategic move represents a significant evolution in corporate treasury management, mirroring MicroStrategy's pioneering approach with Bitcoin, but focusing on a different digital asset. The deal structure includes sophisticated safeguards, such as a 1-year lockup period for founding shareholders, followed by a 3-year restricted release period, ensuring long-term commitment to the project. The partnership signals growing institutional confidence in the Kronos blockchain ecosystem, which offers high-performance, interoperable network capabilities designed to support real-world applications in finance and commerce. The market implications extend beyond just CRO price appreciation, as this type of large-scale institutional adoption could encourage other corporations to explore similar treasury diversification strategies. Meanwhile, technology giant Google has reached a significant milestone in its blockchain development efforts, confirming that its Layer 1 blockchain project, known as Google Cloud Universal Ledger, has progressed to the private testnet phase. Rich Widman, who leads Web3 strategy at Google, revealed that this ambitious project incorporates Python-based smart contracts and is being designed as a neutral infrastructure solution that can serve multiple financial institutions simultaneously. Unlike competing platforms from companies like Circle and Stripe, Google's approach emphasizes interoperability and institutional accessibility, allowing any financial institution to build on the platform without exclusivity constraints. The development of Google's blockchain infrastructure comes at a time when stablecoin transaction volumes have tripled, reaching $5 trillion in organic transactions and $30 trillion in total volume during 2024. This surge in stablecoin adoption is driving institutional interest in blockchain-based payment solutions, as traditional cross-border payment systems remain costly and complex. The potential market impact of Google's entry into the blockchain infrastructure space could be transformative, given the company's vast technical resources and existing relationships with enterprise clients. The partnership with CME Group for pilot testing demonstrates serious institutional interest, with new services scheduled for release in 2026. The Ethereum ecosystem also witnessed significant whale activity as dormant addresses began accumulating substantial positions during the recent price correction. A long silent wallet purchased $28 million worth of ETH on Kraken, marking its first interaction with the exchange since 2021. This type of strategic accumulation during market weakness typically signals long-term confidence from sophisticated investors who view temporary price dislocations as attractive entry points. Additional whale activity included one-address purchasing and staking approximately $2.55 billion in ETH through Hyperliquid, while Bitmine added $252 million in Ether to raise its total holdings to 797,704 Ether. The accumulation pattern in Ethereum coincides with significant inflows into spot Ethereum ETFs, which have attracted over $1 billion since August 21st. This institutional interest suggests that professional money managers view the current price levels as attractive relative to Ethereum's long-term potential, particularly given the network's dominant position in decentralized finance and smart contract applications. The combination of whale accumulation and ETF inflows creates a supportive technical backdrop that could limit downside volatility and provide a foundation for future price appreciation. User experience improvements continue to drive mainstream adoption as MetaMask introduced a revolutionary social login feature that eliminates the complexity of managing 12-word recovery phrases. This development addresses one of the most significant barriers to cryptocurrency adoption by allowing users to create, backup, and restore wallets using familiar Google or Apple accounts. The system generates secure passwords and stores recovery phrases locally, maintaining the non-custodial nature of the wallet while dramatically simplifying the user experience. The market implications of improved user experience features like MetaMask's social login extend far beyond individual convenience. By reducing technical barriers, such innovations could accelerate mainstream adoption of decentralized applications and cryptocurrency services. The timing coincides with broader regulatory clarity in the United States, creating a more favorable environment for companies to invest in user-friendly infrastructure improvements that could drive the next wave of cryptocurrency adoption. Decentralized finance continues its expansion with BitLayer launching its BTR airdrop verification phase, marking another significant milestone for Bitcoin DeFi ecosystem development. The airdrop allocates 10% of total BTR tokens for ecosystem incentives and 2.66% for Binance booster campaigns, rewarding early contributors, partners, and liquidity providers who participated in the BitLayer network development. The claiming window opens with tiered vesting schedules designed to encourage long-term participation rather than immediate selling pressure. The growth of Bitcoin-based DeFi solutions represents an important evolution in cryptocurrency infrastructure, as it brings programmable functionality to the world's largest and most established digital asset. Previously, Bitcoin's limited smart contract capabilities restricted its participation in the rapidly expanding DeFi ecosystem, but Layer 2 solutions like BitLayer are changing this dynamic by enabling complex financial applications while maintaining Bitcoin's security guarantees. Market performance in the altcoin sector showed mixed signals as Hype token approached the psychologically significant $50 resistance level. Trading at approximately $49.28, just below its all-time high of $49.86, Hype demonstrated remarkable resilience with a 17.37% increase over 7 days, despite broader market volatility. The token's $16.46 billion market capitalization reflects growing institutional interest in the Hyperliquid ecosystem, which has achieved impressive trading volumes and fee generation metrics. The technical analysis of Hype reveals critical support at $37.30 and resistance at $50, with social media sentiment showing mixed signals as 37.3% of tweets display bullish sentiment compared to 49.68% that are bearish. The token's performance highlights the growing importance of decentralized exchange infrastructure, as Hyperliquid has consistently demonstrated strong revenue generation and user adoption metrics that support its valuation. Corporate fundraising activity remained robust as DeFi Development Corp announced a $125 million equity raise priced at $12.50 per share. The proceeds will fund spot and other investments while expanding Solana adoption initiatives, reflecting continued institutional confidence in blockchain technology despite recent market volatility. This type of substantial fundraising demonstrates that institutional investors remain committed to blockchain infrastructure development and are willing to deploy significant capital during market uncertainty. The non-fungible token market showed signs of revival as trading volumes and prices began recovering from their prolonged decline. July NFT sales reached $574 million, marking the second highest month of 2025, while weekly volumes in late August topped $93 million for the strongest performance in a year. The recovery is being led by blue-chip collections like CryptoPunks, which generated $2.8 million in weekly sales, and Pudgy Penguins, which announced ambitious plans for a 2027 initial public offering based on projected $50 million in annual revenue. The NFT market recovery suggests that the sector may be entering a more mature phase, characterized by projects with genuine utility and revenue generation, rather than speculative trading. Pudgy Penguin's IPO plans represent a potential watershed moment for the industry, as it could become one of the first NFT-native brands to transition to traditional public markets. This evolution could provide a template for other successful Web3 projects seeking to expand their capital base and institutional accessibility. Exchange activity provided additional insights into market dynamics as MEXC concluded its Solana Eco Month campaign with over $400 billion in trading volume and 128,000 participants worldwide. This impressive engagement demonstrates continued strong interest in the Solana ecosystem despite recent market volatility. The campaign's success reflects Solana's growing adoption in decentralized finance applications and institutional investment products, with multiple firms filing for Solana ETF applications that could further expand mainstream accessibility. Stablecoin infrastructure continues evolving as a new Goldman Sachs report highlighted the growing importance of dollar-pegged digital assets in global financial systems. The report suggests that stablecoins are likely to become foundational payment and settlement infrastructure not only in cryptocurrency markets, but also in traditional commerce and remittances. With hundreds of billions in circulation and treasury yields above 4%, stablecoin issuers are generating substantial revenue streams that could support continued innovation and adoption. The institutional embrace of stablecoins represents a significant validation of cryptocurrency technology's practical applications. Major issuers like Circle and Tether have become substantial holders of U.S. Treasury securities, with Tether ranking among the top 20 Treasury holders worldwide. This integration with traditional financial markets creates positive feedback loops that could accelerate broader cryptocurrency adoption while providing stability during periods of market volatility. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.